And with tax season in full swing, Phil Cooper, a financial advisor with 210 Financial, is here to share tips on everything from deductions and credits to strategies for homeowners and entrepreneurs. Welcome back, Phil.
Rashawn, good to see you.
Good to see you too. Now, before you can even get your refund and figure out what to do with it, you have to file your taxes.
You do.
And a lot of things that get people stumped are the credits and the deductibles. So what are some common or lesser known deductibles?
Yeah, you know what's amazing is we have to file taxes every year, and it still, as an American, it still becomes so confusing to us. The IRS is a confusing thing. But the goal of this is always trying to get as many deductions as we can. We want to pay our taxes, of course. We live in the greatest country on planet Earth. And this country takes a lot of money we have to fund our military, we have to fund Social Security, we have to fund Medicare. That's our taxes going to Washington. I am honored to pay taxes in this country, but I could be just as honored by paying a little less, right? So I'm looking at deductions. Where can I save a few dollars, put them in my pocket versus Uncle Sam's pocket? A couple of easy ones are to contribute things like your 401k. Every dollar that goes into your 401k is a dollar I don't have to pay taxes today. Fund my IRAs, same thing, every dollar that goes in there. So make sure you're maxing out your retirement plans. That's going to be, every dollar that goes into those is going to be good for later. You're going to have a lot more money later, but number two is you're not going to be paying tax on those dollars right now. So make sure you're maxing out your retirement plans. That's the best place to find a deduction.
Now, when it comes to putting in these deductions, you more than likely have to have a form or some type of information, right? I know if you donate to a church or whatever you give your money to, they give you a type of tax form. So for people with 401ks, or where exactly do they look for that type of information?
Yes, if you have a 401k, that means you have a job, and that job is providing you something called a W-2 form. At the end of the year, your employer gives you a form called a W-2 and says, I made this much money, I paid this much in taxes, I contributed this much to my 401k. It's all on there, and it's just plugging it right into your tax return, and it will calculate everything for you.
Is that the same for a Roth IRA?
It is. So a Roth IRA is going to be slightly different. A Roth means I will get no deduction today. So if I'm going to put in my Roth money, let's make up a scenario. Let's say I maxed out my Roth IRA this year, and for this year, if you're under 50, it's about $7,000. If you're over 50, it's about $8,000. So let's say I maxed out my Roth, put in my $7,000 this year. I do not get to write that off. It is not a deduction at all. The benefit of a Roth is down the road, that $7,000 maybe has grown to $20,000 or $30,000 over the next several decades. If I pull that out later, there's no tax due on it down the road. So I get no deductions today. All of my tax favored will come at the end of that Roth.
Okay, so let's shift from deductions to tax credits. What are the difference between the two?
Huge. Tax credits comes off dollar for dollar. For example, there are people who have children, and we can write off child tax credits. That means if you have a child, there's maybe a $2,000 tax credit. That means I just take $2,000 right off my income, and I get that money right now. I get those dollars in my pocket today. So maybe I wasn't going to get a tax return. I claim my child on a tax credit, and now I can have maybe a couple $1,000s coming back to me.
Are there any specific deductions or credits for homeowners?
There is, but they've been greatly reduced over the last several years. You used to be able to write off a lot of your interest on your home, mortgage interest and things like that, but the federal government has raised the standard deduction so high, and what that means is an individual, it's a little over $14,000. Unless my itemized deductions are greater than $14,000, unless my giving was greater than $14,000 or my interest on my home was greater than $14,000, I don't really get to claim that. They allow me to write off $14,000 even if I don't have mortgage interest. Even if I don't have charitable giving, I still get to write the first $14,000 some odd dollars off. So if my giving is higher than that, or my mortgage interest is higher than that, then I can possibly write it off. But the days of itemized deductions have been greatly reduced over the last few years.
Wow, times are really changing.
They are, yeah.
Okay, so let's talk about the entrepreneurs, the people that do freelance work or they own their own business. Are there any deductions?
Huge amount of deductions. Every mile they drive for business, every piece of article of clothing they have to have specific to their business. If they take a client to lunch, write that off on your taxes. That's dropping their income down to these levels, and they were going to pay tax on what's left. Those expenses for entrepreneurs, massive tax savings over somebody who has a W-2 job.
Wow. Okay, so of course we want this conversation to be inclusive for everybody in
Yeah,
different
of
walks
course.
of life.
Yeah.
So let's say that you're getting married, or you're just now becoming a homeowner, or just starting a business. How do you prepare to file for the next year? What do you need to start doing?
Good records. Always keep good records. Always look for every tax benefit you can, like maxing out that 401k, maxing out that IRA. If you're self-employed, maxing out something called a SEP or a simple IRA. All it means is I'm putting money into these buckets that I don't have to pay tax on now. I get to pay tax on those down the road, preferably when I'm retired and hopefully in a lower tax bracket. But I'm looking for options to reduce my tax burden today. Looking for every credit. Have I written off every one of my children? Have I written, if I'm self-employed, I can maybe possibly write off a section of my home as an office in my home. I'm writing out my miles, keeping good logs. Just keep great records. Research, read, educate yourself.
Now, when you're keeping those records, is there anything specific you want to keep in mind, because you have to file state and federal tax?
Yes.
So is there any specific record keeping that goes into making sure
Just
you're
making sure you
prepared to
have
file both?
meticulous records. For example, you mentioned the entrepreneurs. If they're going to write off miles in their car, they need to keep a log, an actual handwritten log in that vehicle. Yes.
Handwritten, that's what he said.
And I'll
Did
tell you,
know?
if you don't have that, they're going to ask for it. The IRS or the state of Illinois could ask for that to say, hey, we noticed you wrote off miles in your car. Could you show us that log? And that's when you don't want to go, no, let's make sure we can say, yes, here it is. So keep that handwritten log to say, yes, I drove from point A to point B. I met with client so-and-so on this date, and write those miles off. So just keep great records.
Oh my goodness, a lot of knowledge coming from you, Phil. We truly appreciate you coming in.
Appreciate you as well. Yes.
And join us for another edition of Money Mondays with 210 Financial on April 7th. We'll have more tips to help you take control of your financial future.